This video is review of Japan Tobacco's fiscal year 2025 first quarter financial results, period from January 2025 to March 2025. JT Japan Tobacco Inc. is a major Japanese multinational tobacco company. JT was originally a government-owned entity, but was privatized in 1985, and the company operates globally and has expanded beyond tobacco into pharmaceuticals and processed foods. 2025 first quarter consolidated results. JT reports on both a constant FX basis and a reported basis. Constant FX is calculated using the same foreign exchange rates as in the previous fiscal year, while the reported includes the effects of currency fluctuations. In the first quarter of 2025, revenue rose by 11.7% to 827 billion yen year-on-year on reported basis. Core revenue on constant FX basis rose even more by 13.3%, mainly supported by higher prices in the tobacco business. AOP, adjusted operating profit, also grew solidly, thanks to strong performance in both the tobacco and pharmaceutical businesses. However, foreign exchange effects in the tobacco business had a negative impact on AOP. The depreciation of emerging market currencies, like the Russian ruble, and rising costs in some currencies outweighed the benefit from the weaker Japanese yen. Net profit was nearly flat year-on-year, rising by just 0.1% to 157.5 billion yen, as financial expenses and higher corporate taxes offset gains from operating profit. Progress rate against the annual net profit forecast of 450 billion yen is 35%, which is a good progress so far. Tobacco business volume performance. JT experienced continued market share gains and growth in RRP, reduced risk products, helped by the contribution from acquired Vector Group and growth of Ploom brand in both Japan and overseas. However, overall tobacco volume declined slightly by 1.3% due to falling industry volumes in several major markets and unfavorable inventory movements. In the combustibles segment, volume fell by 1.7%, even though regions like the EMA cluster, which is Europe, Middle East, and Africa, performed well, and global travel retail, such as duty-free shops, continued to grow. Combustibles sales declined in key markets like Japan, the Philippines, and the UK. On the other hand, RRPs saw a rise by 19%, driven by rising demand for HTS, heated tobacco sticks, and the steady expansion of Ploom's market presence, as the sales volume of traditional combustible tobacco products continues to decrease, but reduced-risk products sales volume is expanding. Tobacco business financial performance. Core revenue grew by 13% and by 14% at constant FX, driven by a strong price-mix contribution across all clusters and the acquired Vector Group contribution. On a reported basis, adjusted operating profit increased by 17.8%, but was impacted by unfavorable currency movements due to the depreciation of certain emerging market and cost-related currencies. Overall, the tobacco business is performing well, with both revenue and profit showing solid growth. Tobacco business results by cluster. In Asia and Western Europe, the overall industry volume for combustible tobacco declined. However, in the EMA, Europe, Middle East, and Africa industry volume was more stable in the several markets, and JT achieved market share growth. In the EMA region, adjusted operating profit increased significantly, rising by 57%. Especially in Asia and Western Europe, strong pricing strategies helped offset the negative impact of lower sales volume. Ploom Global Overview. Ploom's market share has been steadily growing each year in various markets. However, its share is still relatively small, around 12% in Japan and below 10% in other regions. There is some concern about how much Ploom can make up for the decline in combustible tobacco sales in the future. Transfers of both the JT Pharmaceutical business to Shionogi and shares of Torii. This was surprising news, but JT announced that it has agreed to transfer its pharmaceutical business to Shionogi, including its shares in Torii Pharmaceutical, a JT subsidiary. This will be done through a simplified business split and a series of share transactions. As a result of this transfer, JT expects a decrease in profit attributable to its shareholders, which will be recorded as a loss from discontinued operations starting in the third quarter of fiscal year 2025. Despite this change, JT's planned dividend for the year will remain unaffected, as it will be based only on the continuing parts of the business. After the transfer, JT's business will focus entirely on its tobacco and processed food segments. The tobacco business will continue to be the main source of profit growth, while the processed food business will play a supportive role. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,506 yen as of May 12th, and the US dollar stock price is $15.29 as of May 12th. Current PBR is 2.11, and PER is 17.8. Dividend yield is 4.31%. Compared to the past few years, the current stock price is relatively high in terms of PBR, PER, and dividend yield. Although the stock was in a downward trend for a period, it has been rising steadily in recent months. The dividend yield is still quite high at over 4%, but since JT's yield was around 7% a few years ago, the current level may feel a bit underwhelming to some investors. Conclusion. Last year ended with a decline in both revenue and profit, but this fiscal year's forecast to see an increase in both. There have long been concerns about the high dividend payout ratio, but recently, the company has continued to keep the high dividends. Although the decline in sales of combustible tobacco products is concerning, JT appears committed to continuing strong shareholder returns through dividends.